Good evening, folks. This is your friend Adeel here, and I welcome you tonight for this weekly webinar at our new time, which is 8 p.m. Australian Eastern Standard Time. And we will be having these webinars every Tuesday night moving forward. I welcome you all. If you are watching it live, please leave us a hello, give us a wave, leave us a comment in the comments wherever you're watching. This is going live on YouTube as well as on LinkedIn. So wherever you are, please let us know. Make your presence felt, right? So first of all, we'll be talking some really interesting things today, and you're more than welcome to ask questions. And if you want, you are more than welcome to ask them live over here. The other option is if you're watching a recording, please make sure you post your questions in the comment section, and I will personally address to them in the following week. Or the third option is you can also email your questions at helpme@arizabuyersagent.com.au. I repeat, it's helpme@arizabuyersagent.com.au. And there is nothing like a stupid question, right? So feel free to ask questions. And before we delve into today's topic, if you find this particular webinar interesting, make sure you like and share, and also share with your friends who you think can benefit out of it, right? So before we delve further and I talk to you about the different topics that we'll be discussing today, just a quick disclaimer to begin with. Any information or content that we present in today's webinar is not a financial, legal, or tax advice. Make sure that you seek your independent advice professionally and then act accordingly on that advice. Don't just copy and paste any information from here and start acting on it, please, because we are not providing any specific advice regarding your situation. It's more of a generic content that we are presenting today. Okay, so now let's get started. Today we'll be having different topics that we'll be talking about. We'll be talking about inflation numbers which have come out, and that's a very good news for a lot of you who have been waiting for inflation to head in the right direction. I'll be sharing that news. Then we will talk about how has the inflation been tracking for the housing industry, like. And then after that, we'll be talking about what are the different markets, how the different cities like Sydney, Melbourne, Adelaide's, and Perth's and Brisbane's have performed over the last 12 months, and how the houses in those cities have performed in terms of price growth versus the units. So we will delve into that as well. And we will also debunk one favorite myth of mine, which is that you should rather always be buying close to a CBD for good capital growth or for good price appreciation. So that's a myth that we'll be talking about, and look at what the data has to tell us if that myth really holds true or not. So let's get started, guys. I will be quickly sharing the screen over here with all of you, and at any point of time, like if you want to discuss any of the situation where it's a personal thing, you don't want to discuss it in the public forum, perfectly fine. You have the QR code on your screen right now. Just scan it, book in a time with myself, and would love to chat to you about your individual circumstances, right? So moving ahead with today's presentation. Now, inflation numbers that have come out on like last week, 25th of September, this data has come out from the ABS, the Australian Bureau of Statistics. And for the first time in pretty much last 3 years, inflation has fallen in the band that we all have been waiting for. RBA has been saying that they want the inflation back in 2 to 3% of target range. And finally, as you can see over here, the monthly CPI indicator for the first time since August 2021 has fallen to 2.7% in August 2024. So it has taken 3 years to come back. And remember, the last interest rate rise that RBA did was back in November 23. So even after that last rate rise that happened like 10 months ago, it has taken close to 1 year or 10 months for the inflation to start heading into the right territory. Still, it's a very beginning. I mean, there can be a bit of oscillations. The inflation may go up again because of some spending that people would do during the school holiday season, which is currently happening across the country. So because of that holiday spend, this number may fluctuate a little bit once the September data comes out by the end of October. So just don't be too excited for that. But the good news is that inflation definitely is heading in the right direction, which is in that target band of 2 to 3% consistently. And you can see how much time it has taken. Like it actually hit close to 7.9% back in February 23, right? So it was really high, as you can see in the graph, but now it is really coming down where it needs to be. So that is a very, very good news. Moving forward, how is that having an impact on housing, or where does housing sit in terms of all this inflation data? So there are two main components we are discussing over here for the housing inflation. One is the cost to build new dwellings, the cost to build those new apartments, those new houses, those new house and land packages that you see coming up. So all that cost. Now that cost has been consistently going up. It was really high around in August 23, August, even on August 22 as well. And then it has started coming down. So it has started coming down quite a lot. And at this point of time, it is kind of sitting consistent for the last 1 year, where the cost to build new dwellings is sitting around 5%. So it has not gone away. It is still higher than what our inflation is, around 2.73%. So housing or new housing construction definitely is having an impact on the overall inflation, as we can see. And the other thing is also the rental increases, the rents that have gone up. Now, a lot of tenants are struggling with the rental side of things, and it is becoming a bit of a challenge for them to actually being able to afford those rents, right? So that rental increase is around 6.8%. It was 6.9% in the last month, but it is now close to 6.8. So that is also sticking very, very consistently over there, and it's not easy for the tenants. For landlords, they are enjoying some good rental gains. And again, this will not continue forever. This should not continue forever. Otherwise, this is not sustainable. But for now, the rental markets remain tight. The vacancy rates are super low, and the rents keep on going up nationwide. There are some areas where the rents are softening right now, but the overall demand is still very, very high for good rental properties in good, diverse economic areas. So that is definitely what we can conclude from here. Please feel free to post your questions into the chat. We will keep an eye on that. And thank you. We have a question about Melbourne. Like, is it a good place to be buying right now? Again, we will come to that question once we finish with the presentation today. But definitely that is worth asking, and everyone is asking this question these days, right? About Melbourne property market. So we will cover Melbourne as well in today's presentation in a few minutes. Now, a lot of people talk about that real estate grows together. Every place grows up in value simultaneously. People think it's a win. It's a one big property market, 15,000 suburbs in Australia. They all grow together. If the interest rates go up, they will all fall down in value. If the interest rates start going down, they will all start rising in value. That's the myth. It is incorrect. And as you can see, the data from the last 12 months, this is from CoreLogic, one of the most trusted source of real estate data in Australia. And you can see over here, different cities have actually performed really differently in the last 12 months. And the interest rates have been the highest in the last 12 months. Like ever since from 2012, 2013, the interest rates have been at their real peak in these last 12 months, right? But Sydney has performed really very marginal performance, 4.5% overall for Sydney. We will be breaking down Sydney further in today's discussion as how different suburbs and different areas of Sydney have performed. So make sure you stay tuned and watch right till the end. Melbourne, again, in the negative territory, a lot of factors for that. There was a land tax implication, a lot of lockdowns, not as desirable place to live as it was pre-COVID. So that has impacted the Melbourne property market. Adelaide has done so very well, has gone up by like close to 15%. Brisbane, again, 14% growth in the last 12 months overall for the city. Perth, the outstanding growth of 24%. Hands down, Perth has been the best performer in the last 12 months for sure. In fact, for the last 18 or 24 months, I would say Perth has done really, really well. Now, that is how you can see that the interest rates were high for all these cities at the same time. But all of these cities have responded differently to the rise of interest rates, and the difference has been remarkable when you compare negative 1.4% growth in Melbourne versus 24% positive growth in prices in Perth. It's a huge difference, and that is where it shows that it is not one big property market. It's more about what is happening locally in that city, and we will further delve into whether it's just about the city, or do we need to look further down at a more micro level, right? So as you can see, what we have tried to do over here is there is how the units and the houses have performed in these different cities in this 12-month period. Now, as you can see over here, in Sydney and Melbourne, the units have not performed that well. Well, in Melbourne, even the houses have not performed well. But in some of the smaller cities, or the so-called smaller cities, the Brisbanes, the Adelaides and Perths, the units have actually outperformed the housing market. The units have grown more than what the houses have grown on average in these three cities. Now, I'm not advocating that you go and start buying units blindly. That's not what the purpose is. The purpose over here is, the purpose will be clear if you look at the last row. What has been the overall growth for houses across the country versus what has been the overall growth for unit values across the country? And that is where you see the actual difference. Houses have grown close to 8% across the country, but the units have performed around 4.8% only, right? So that is where you can markedly see the difference, that yes, units have done well in Perth and Adelaide and Brisbane. And the main reason for that is affordability, because a lot of people were, when they were getting cashed out or they were not able to afford a house, they had to turn towards units, and that is what increased the demand for the units. So in the short period, in the last 12 months, in some of these cities, as you can see, yes, units have done well. But in the longer run, should you still go and buy units? Not really. And you can see how the aggregate has performed. Houses are still much better than what the units actually have done in the last 12 months. So that's why it's important that you look at the data, not just at the suburban level, but also at the aggregate level, and just try to make sense out of it. And long-term averages also suggest that units probably would have growth of 4 to 5% per year, but houses grow around 6 to 7%, sometimes even 8% per year on a citywide level, right? Now, we have a question from Margaret as well, more of a comment that it's interesting that the location makes such a difference. Yes, in Perth. You're right, Margaret, and welcome. You good to see you in our webinar tonight. But yes, location does make a difference, and I will share some more data which will be even more interesting for you guys, right? So it's not about whether you should buy units versus houses, but you make sure that if you are making that purchase decision, make sure you buy the right asset type for that particular location. And in most cases, houses are the best asset type in the longer run. Okay, so that's what we can conclude from here. Okay, so Edward, good to see you online. And you have a question, where do you see interest rates going forward? Well, I will definitely address that question shortly, but now we have another very, very important slide. And this is a big myth, guys. I can't overemphasize it at all. People keep talking about, oh, you just buy close to a CBD because that is where you get good growth. Buy close to a CBD because that's where the jobs are, that's where all the infrastructure is, that's where people want to live, that's where you get good schools, and that is where your property appreciates in value. So that is a big myth. And if you see this data over here, this is the data of 6 different suburbs in Sydney over the last 12 months. And it shows how the houses in those 6 suburbs have performed in the last 12 months, and also how far are they located from the main CBD. You look at Sydney right at the top, the Sydney CBD itself. The house values in Sydney have dropped by 57% in the last 12 months. They used to be more than 3.3 million. They are less than 2 million now. That is how much the house values have dropped in the Sydney CBD itself, right? Now, does it mean Sydney is a bad place to buy? Or should we just abandon Sydney completely because it will have potentially minus 50% depreciation everywhere, or negative growth, I should say? Not really. That's when you have to look at other suburbs as well as to how they have performed. I'm looking at Pimble, which is like 20 kilometers northwest of the CBD itself. It has done a marginal growth of 4.7%, which is in line with overall Sydney growth of around 4.5%, which is kind of okay. Parramatta, 24 k's away from the Sydney CBD, and Parramatta itself is a CBD as well, and it has done quite a decent growth of 6.7%, given the fact that how Sydney has performed itself, right? Then we look at some of the other areas. One of the suburb that really stood out when I was doing this data, Jamieson Town, that is a suburb in Perth, at least 55 k's away from the Sydney CBD, right? And this has done really well. The houses have gone up on average by 8.1% in this suburb. Now, again, that doesn't necessarily mean that you start jumping and buying into Jamieson Town right now, because the last 12-month growth doesn't necessarily mean that it will still have growth for the next 12 and 24 months. So that is where you have to look at the data, which tells you about the future. And we will talk about it, how to look at the data for future capital growth in the later episodes of these webinar. But that is not our point of discussion for today. One of the other areas, which is Austral. Now, Austral has had a lot of hype around it because of the airport coming, because of the economy suddenly booming around this area. So I remember houses used to be around 650K 3.5 years ago. The brand new house and land packages, they went over a million 12 months ago. They have dropped back below 1 million. So they are now like 4-bed, 2-bed, brand new 4-bed, 2-bath, brand new houses in Austral are kind of selling for 950, 970K on a decent sized lot. So the prices have dropped, and you can see it has dropped like 2.3% for houses on average. Again, growth has nothing to do with the distance from the CBD. This is like 49 k's away from CBD. Jamieson Town is 55 k's away from CBD in the Western Sydney, but it has done much, much better than Austral. One of the key factor that you have to consider is local supply and demand. The reason I see Austral going down in value and not performing well in the last 1 year is primarily because of supply. There has been a lot of supply, a lot of new houses hitting in Austral. So the buyers have a lot of stock to choose from. And once a buyer will have a lot of stock to choose from, they will start negotiating on price. Because guess what? If you are a seller and you don't want to sell if you don't want to budge on price, the buyer have 4 other options to choose from in the same street for the same kind of property. So that is where, as a seller, you need to be really considerate of this fact. And if there's a lot of supply coming for sale, a lot of houses coming for sale in your suburb, then you are not in the right suburb. That is where your property price growth will definitely get impacted. So one key criteria of having good price growth in the future is always identifying suburbs where the future supply is going to stay low or is expected to stay low. And one key criteria of figuring that out is going to the ABS website and looking at future council approvals. In Austral, there are a lot of new houses coming up, and the houses which are coming up now was actually evident 2-3 years ago when the council approval was there on the website. So if anyone was making a purchase decision 2 years ago in Austral, should have looked at that data, and that would have given them the indication that Austral will become an oversupply area in 2 to 3 years time. So it's better to stay away from that area. So this is just one tip when you're selecting a suburb for good price growth in the future, right? Windsor, this is a suburb which is 56 k's northwest of Sydney, and Windsor itself has a very limited economy, but it has close proximity to Norwest Business Park. It's like 25 minutes drive from Norwest, Bella Vista, 35 to 40 minutes to Parramatta. But this particular suburb has done really well, like an outstanding suburb in the list, double-digit growth when overall Sydney growth was only 4.5%. Windsor has done like double growth than that, 11.1%. So this goes to show, if you are buying in the right area, doesn't necessarily mean that you have to be close to the CBD. And one of the key reasons that I see Windsor has grown is very, very limited supply of properties. And another important factor is its affordability. So houses are still affordable over there. You can still buy a house for around 800, 900K. That is one of the key reasons why Windsor property market has gone up. Now, doesn't mean that you start buying in suburbs where the prices are low. You have to look at other economic drivers as well, which will ensure that the prices keep increasing in those areas. So that's why don't just think that buying close to the CBD will make you big bucks. It doesn't always work. And I've explained this right in front of you with the example of Sydney, which people think that Sydney always grows in value and Sydney is the best place to invest. Sydney is the best place to buy. I will always buy in Sydney. I will never get out of Sydney. Guess what? If someone invested in Austral 2 years ago, they've actually lost money, right? They've lost money in these last 2 years. Well, what happens in the next 10 years? Yes, everything grows in value in 10 years' time. That's true. But if you are someone who wants to make good appreciation of price in the first 2 to 3 years of your purchase, so that you can make that jump and you keep buying more properties faster, and you can get your equity refinanced and you want to build a property portfolio, that is where I see Sydney does not tick that box right now. Sydney is not the place to go. That's what my understanding is based on the data which I'm sharing with you in black and white. So that is it from my side at this point. We will be taking questions, guys. So if you have questions, please post them in the comment section. I can see some of the questions coming. If you have a personal situation that you want to discuss about, if you have property plans, property goals, scan the QR code which is coming up on the screen, book in a call with myself, completely no obligation call. You won't be charged for anything, but this gives you an opportunity to sit down and have a chat with me one-on-one, and we can go through your property requirements and give you and strategic advice accordingly. Okay, so the QR code is right there. If you want to scan it, book a call, more than welcome to do so. So where do we see the interest rates going forward? Very, very good question, very valid question, Edward. Just as I showed initially, the inflation has finally, the monthly inflation for August has fallen in the 2 to 3% of range. It is currently sitting at 2.7%. So I feel at this point of time, with the Christmas approaching as well, with the households already having a cost of living challenge, I feel RBA will not be playing with the interest rates, especially at this point of time, given the Christmas and everything. They will probably stick with the interest rates and they will want to see how the inflation actually continues to hold out. Also, the data that comes out for the September quarter, which will happen towards the end of this month, end of October, that will also be a very good indication whether the interest rates will be moving in the November meeting that RBA will be having. I personally feel interest rates will not move anywhere, because even if the data comes out really well for September quarter, let's say it falls within the 2 to 3% range for the whole quarter, and looking at that one quarter performance, if RBA decides to bring the interest rates down, I feel it will be a bit too early. So they would rather want to keep it steady, right, like that, maybe review it again in the December meeting. I personally feel even until December, they should not be touching it. Probably once they come back in February, that is when potentially we can consider or we can expect a potential rate cut. That's what my understanding is, based on how the data is tracking and how the inflation is tracking at this stage. If suddenly something starts changing over the next couple of months, then of course we will have to consider that as well. Now, Margaret has a question. Does it make a difference if you know why an area is booming? Well, it does. It does make a difference that why an area is booming, and for an area to boom or not to boom, it depends on a lot of local factors. What is happening in that area? What kind of people are living there? What kind of incomes are people making? If a suburb has people who are living there who are making good median incomes, then the likelihood is that they will be willing to pay for the increase in prices as well. If more people are wanting to live in that suburb, if more people are migrating into that suburb and the suburb population is going up, that is a very good indicator that the demand is going up. And that is when the demand of rental properties as well as demand to buy a property over there will keep increasing, and that increase in demand will keep pushing the prices higher. So knowing what is happening at a local level, at a suburban level, is extremely important before you can figure out which areas are likely to perform better than the others. And that is where that suburban level data and suburban level data analysis is the key. That's what we do in-house, and that's what you should do as well if you're looking to make that purchase decision from investment point of view. Then we have, what are your thoughts on the acreage properties? again, Acreage properties, a very specific strategy. A lot of people who have a lot of cash sitting on the side, for them, Acreage properties may work very well, because for acreages, you are looking at a long-term strategy. You are looking to create wealth in the longer run. So you buy something cheaper now. There are acreages even in around Newcastle area, even for a mill, further up from Newcastle in New South Wales. You can buy something for a mill and you can hold it for the next 5 years, 10 years. And once the rezoning happens, that is when you cash out your money. So if you have good cash sitting over there, you are not worried about mortgage repayments. You're not affected by the interest rate going up or down because you're not having a mortgage. It's a cash purchase. That is when Acreage can work well for you in the longer run. For short-term investors who want to make investment and gain benefits out of it quickly, who are taking loan, who may be stretched if the interest rates go up or down, then that is where they need to consider their household cash flow before they get into investments. And for those people who are tight on a budget or who have a certain budget to play with and they are taking loan for investment, I would generally not recommend them going for an acreage purchase unless they have no issues in paying the mortgage for the next 5 years at least, right? Again, the same answer for the acreage properties as well for Dural, Galston, Canters, Glenary area. Again, if you can afford it, try to make a cash purchase. If you can't do a cash purchase, then try to go for at least, let's say, few people, friends can combine. They can potentially form a trust. Again, it's not a tax advice or a legal advice, but potentially what people can do, and I've seen them doing, is they can create a trust and they can try to buy something of cash, or they can try to buy something with 60 or 70% deposit where the loan amount is only 30 or 40%. So that's where, because the loan amount is now small, if the interest rates go up and down, and because there are 3, 4, 5 people who are in a trust, they can share that cost of mortgage, and that's where it becomes easier. If you are the sole income earner, or if you are a family with a husband and a wife who are having a certain budget to play with, you have your own mortgage of your house, plus you won't end up buying an acreage for a loan amount, then you have to consider your cash flow, and that is where a lot of times that will not work for you. And the worst thing I want you to do is you buy something now, and in 12 months or 24 months when the cash flow is not working, you just sell it and get rid of it. That's the last thing you want to do, right? So you want to buy property for long-term gains. Okay, so there was a question initially which came for buying in Melbourne, right? So thanks very much for that question, Saj. It was about this can be a good time to buy a house. See, with the Melbourne market, as it is pretty much sitting at the bottom of the current property cycle. And with Melbourne, again, if you can look at the local factors, well, if you know what suburb you want to buy in, there is a lot of negotiation opportunity as a buyer. And we plan to do a webinar in the coming weeks on negotiation only, where we will talk about negotiation tactics, how you can leverage negotiation principles in any market, whether it's a buyer's market or a seller's market. Probably there we can share some examples about the purchases we are doing in Melbourne and how we are negotiating over there. Because negotiating in a Melbourne market, which is really a buyer's market, is very different to negotiating in a Perth market or a Brisbane market, which is a highly seller's market, where the prices are rising every month, every week. So the negotiation tactics actually change. But I think at this point, if you can afford to buy a house, and to answer your question, if you can afford the repayments, I think this is a very good time to buy your own home to live in Melbourne. This is definitely the right time for a lot of people, right? So I think we have answered this question. Xiang, thanks. You're welcome. Thanks for tuning in, guys. If you are watching this live, thank you so very much for your time. If you're watching this as a recording, please share this with your friends whom you think can benefit out of it. Follow us on our social media, on LinkedIn as well as on YouTube for more of this content, and post your questions in the comment section of this webinar, because that will allow us to look into your questions and actually answer them in the following week. So whenever you watch this recording, make sure you just type in your question in the comments, and I will personally make an effort to answer that to the best of my ability live next week in the Tuesday's webinar at 8 p.m. Thank you for now. I think these are all the questions that we have at this point. I hope we haven't missed any question at this stage, but thank you very much for tuning in. Feel free to like, share, comment, and tell us what topics you want us to cover in the future. That is really important. We want to hear from you which topics you would like to hear about. Okay, until then, take care and have a very good night. See you.